So imagine you hire like a really top-tier private detective to figure out exactly what happened at a crime scene.
Okay, right.
You're paying him an absolute fortune, to dust for prints, interview the witnesses, reconstruct the timeline, basically piece together the objective truth of the event.
Yeah, doing the heavy lifting.
Exactly. But right as they pull out their magnifying glass, you find out the police actually have a 4K real-time security video of the entire event.
Oh, wow.
Yeah. From like 3 different angles.
Yeah.
And they've just had it the whole time.
Which completely changes the game.
Right. Suddenly you have to ask yourself, well, what exactly am I paying this detective to do? I mean, the mystery's already solved. The authorities already hold the verified truth.
Yeah, the job is kind of redundant at that point.
Exactly.
Yeah.
And welcome to today's deep dive, because we are looking at a situation playing out very much like that, but in the global business world. We're unpacking a couple of really fascinating sources today.
Right. An article called "The Traditional Audit is Being Disrupted," and a piece titled "The Auditor's Dilemma."
Yeah, and our mission for you today is to explore this massive, quiet revolution happening right now in the world of finance and compliance. We are looking at why the traditional, century-old financial audit is fundamentally breaking down.
And, the wild twist here is that it's not breaking down because of, massive accounting scandals.
Right, or a lack of talent in the industry. It's breaking down because governments are now getting the data first.
Yeah, it's a structural transformation, and it affects literally every mid to large size business operating today.
Which is huge.
It really is. But to understand the sheer scale of why the traditional audit is breaking, we actually have to look backward for a moment.
Okay, let's do it.
We need to understand the environment that necessitated the audit in the first place. An era defined by what we call information scarcity.
Right, because for, more than 100 years? The external audit has been the absolute gold standard of corporate trust. An independent party comes in, checks the books, issues a formal opinion. It always felt so permanent.
Yeah.
So how did that era of information scarcity dictate that specific model?
Well, think about the physical realities of business for most of the 20th century. I mean, financial data moved incredibly slowly.
Oh, yeah. Paper everywhere.
Right. It lived in physical, leather-bound ledgers. It was stored in these massive metal filing cabinets or bankers' boxes and dusty warehouses.
Literal just boxes stacked to the ceiling.
Exactly. And that data was assembled by hand at periodic intervals, usually at the end of a quarter or the end of a fiscal year. So if you were an auditor tasked with verifying a massive multinational corporation's finances, say a railroad or a global manufacturer, it was physically and financially impossible to check every single transaction.
Right. You simply couldn't read a million paper invoices.
You need an army of people, so you had to find a workaround.
Right. So it's like you couldn't check the whole pot of soup, so you just tasted a spoonful.
Yes, exactly. That is the essence of statistical sampling. They developed a really rigorous methodology where an auditor would come in, review a carefully selected small percentage of transactions, test the company's internal controls, and then, use statistics to extrapolate the truth about the entire financial picture.
Which makes total sense for the time.
It does. This reliance on sampling wasn't because auditors lacked a strong work ethic. It was just a strict necessity imposed by the limitations of the information environment. They were doing the absolute best they could with scarce, slow-moving data.
Right, and here is where the detective with the magnifying glass comes back into play. Because this massive global profession, this multi-billion-dollar industry, was entirely built around the fact that nobody could see the whole picture at once.
Exactly.
Fast forward to today, and that information scarcity has completely evaporated.
It's totally gone.
Yeah, and it's not being erased because audit firms suddenly bought better software, right? The disruption is actually coming from the regulator.
Yeah, the government has effectively appointed itself as the first auditor.
Which is such a wild paradigm shift.
It really is. In over 60 countries right now, tax authorities have implemented what are broadly known as continuous transaction controls, or CTCs.
Okay, CTCs.
Right. And this is not just a minor compliance update where you fill out a different digital form at the end of the month. This fundamentally alters the architecture of how companies trade.
Okay, let's unpack this, because the how is fascinating to me. The sources point out countries like Italy, Poland, France, and Brazil. So how are these continuous transaction controls actually functioning on a day-to-day basis for a business operating there?
So in a CTC environment, the government places itself squarely in the middle of your daily business operations.
Like literally in the middle.
Literally. Under clearance models, like Italy's SDI system, for instance, when a business generates an invoice for a client, that invoice does not go directly to the client.
Wait, really? It doesn't just email over?
Nope. It goes through a government API and application programming interface. The government system receives the invoice data, validates it against their tax rules in real time, approves it, and then clears it to be sent to the buyer.
Wow. So every single invoice, every credit note, and increasingly every payment is reported and verified at the exact moment it occurs.
Exactly. The second a business issues a bill, the government essentially stamps it.
So, okay, the old auditing model was kind of like an editor reading a book after the entire manuscript was finished, looking for plot holes.
Right.
But this new model is like a spell checker that flags the typo the literal millisecond you hit the space bar.
Yeah, that spell checker analogy captures the immediacy perfectly because the tax authority holds a complete validated record of every single transaction processed by every company operating in that jurisdiction.
They aren't looking at an end-of-year summary anymore.
No, they hold 100% of the raw validated data.
Okay, well, I have to challenge the premise of the audit profession then. If the government already has the complete ingredient list, the recipe, and the spell checker running constantly on every transaction, I mean, what is the external auditor actually doing? Are we looking at the extinction of the traditional auditor?
Well, it's the logical question to ask, but no, we aren't looking at extinction. What we are looking at is a profound fracturing of their job description.
Fracturing.
Yeah, the auditor isn't redundant, but the nature of assurance is fundamentally transforming. It's shifting away from gathering data after the fact and moving toward evaluating the actual systems that produce the data in real time.
Right.
And we can see this fracture happening across 3 distinct areas of the business.
Okay, and the first area to take the hit seems to be the tax audit. Because based on the sources, the disruption here is by far the most advanced.
Oh, absolutely. The traditional tax audit used to be this massive discovery exercise. The tax authority would notify you, show up at your office, ask for your files, and just dig through your records trying to find discrepancies or, hidden omissions.
They were hunting for things they didn't know about.
Exactly. But in a jurisdiction with comprehensive real-time reporting mandates, discovery is a completely dead concept.
Because the tax authority already has the data.
Right. They already know your sales, your outputs, your inputs. The tax audit is no longer about the government finding hidden things. It is purely a reconciliation exercise.
So what's the question they're asking now?
The only question a company has to answer now is, do our internal ERP records perfectly match the government's central ledger at this exact moment?
And if they don't match, the government's algorithm flags it instantly.
Instantly. You don't have 12 months to realize you miscoded a product line.
That completely changes the timeline. Which, leads me to wonder about the investors. Because if the government is checking the tax math in real time, that must completely change the expectations for the financial statement audit too.
It absolutely does.
I mean, the idea of waiting until December 31st for a snapshot of a company's financial health just seems archaic if the data is already flowing continuously.
And that is the second area of disruption. The financial statement audit, the classic annual report is moving inexorably toward a model of continuous assurance.
Right.
The whole as-of-year-end snapshot is just losing its relevance in a digital, highly volatile world. Investors want to know a company's standing now, not 6 months ago.
But how does an auditor even issue an opinion on a continuous stream of data? That sounds like trying to measure the exact volume of a river while the water is rushing past you.
Yeah, it is incredibly difficult, which is why international standard-setting bodies are currently actively discussing how to rewrite formal audit frameworks.
They have to adapt.
They do. They recognize that if 100% of the transaction data is captured, validated, and structured in real time by these government mandates, the accounting standards have to evolve to monitor that data continuously rather than just periodically.
Man, that puts an immense amount of pressure on the third area the sources discuss, which is the internal audit.
Oh, huge pressure.
These are the professionals inside the company tasked with making sure operations are running smoothly. And if the data is being fired off to the government continuously, the internal auditor's job shifts from transaction testing to system evaluation.
Exactly.
So instead of the auditor grading the math homework, They are now grading the calculator itself to make sure it physically cannot make a mistake.
Yeah, grading the calculator is the perfect way to visualize it. If real-time monitoring tools and government APIs are verifying that every transaction is complete and accurate the second it happens, well, the internal auditor doesn't need to waste time double-checking physical receipts.
Right, that would be pointless.
Their responsibility elevates. They have to evaluate the quality of the automated controls, the logic of the code, and the security of the data pipelines.
But if you're an internal auditor listening to this right now, does this mean your traditional accounting degree is suddenly less valuable than, say, a background in software engineering or data architecture? Because this sounds like a massive pivot in human capital.
It is a totally valid anxiety for many in the profession right now. The skill set is absolutely shifting.
Yeah.
If you spent your career gathering data and checking samples, you have to pivot toward understanding systems architecture. You have to start evaluating complex estimates and professional judgments that an algorithm just cannot assess.
Because the machine can't do nuance.
Right. You need to understand how data flows through a global ERP system before it even hits the government portal.
And because if we are just grading the calculator, the raw data we punch into that calculator becomes the absolute center of gravity for a business.
Yes.
The value of this continuous assurance is entirely dependent on the quality of the underlying data at the source.
And this brings us to a really critical inflection point in the sources, which is the death of materiality in the traditional sense.
Oh, yeah. Let's unpack materiality.
Yeah.
Because this is where the stakes get incredibly high.
They really do.
Because in a traditional audit, materiality essentially defines the acceptable margins of error in statistical sampling for large companies. Like if an auditor finds a $10 variance in a sample for a multinational conglomerate pulling in billions a year, that error isn't considered material to the overall financial health of the company.
Right. The audit could tolerate a little bit of noise in the data.
Yeah, exactly.
The old system relied on professional human judgment to say, yes, there is an imperfection here, but it doesn't change the fundamental truth of the financial statement.
Yeah.
But continuous assurance operates on the entire massive data set. It does not sample. It checks every single line item across millions of transactions.
But I need to challenge this, though. If a massive global retailer processes like 5 million transactions a day, a $5 glitch shouldn't matter to the bottom line, whether you use sampling or continuous monitoring.
That's a fair point.
Right. Why would the government or an auditor care about a microscopic typo just because it's real time?
Because in a digitized automated system, an error is rarely a singular random typo made by human fingers.
Oh.
An error is almost always a systemic failure. It's a flaw in the master data. If you have a code glitch that applies the wrong tax rate, say, off by just a fraction of a percent, it doesn't happen just once.
Right, applies to everything.
It happens to 100,000 invoices an hour. That systematic data quality failure surfaces instantly in a continuous reporting environment.
Oh, wow. I see the implication there. A tiny logic flaw in your system's code, which a human auditor might have just missed or dismissed in a sample, is suddenly flagged by the government's algorithm as a massive compounding compliance failure.
Exactly. And that is the terrifying reality keeping finance leaders awake right now. Errors are no longer year-end reconciliation headaches that you can just quietly fix with an adjusting journal entry in December.
Right.
They are immediate operational failures, and they are visible to the tax authority before the company's own CFO even knows they happened.
Man. And this connects directly to the VITA frameworks mentioned in the sources, right?
Yes.
VITA stands for VAT in the digital age. And for listeners not dealing with European tax law every day, VAT is a value-added tax. It relies on a chain of invoices. The government collects a fraction of the tax at every step of the supply chain.
Right. The core mechanism of VAT is that one company's output tax is another company's input deduction.
Okay.
The government needs the buyer's records to perfectly match the seller's records. Historically, discrepancies in this chain created a massive, what they call VA gap, literally billions of euros in lost tax revenue.
So VITA is the European Union's move to digitize that entire chain.
Yeah.
By demanding real-time digital reporting for cross-border transactions, the government's algorithm can instantly match the seller's output with the buyer's input. And if they don't match perfectly, the system flags it.
Which means compliance is no longer a Q4 end-of-year problem isolated to the accounting department. The audit literally begins the exact moment a sales rep finalizes a contract or a supply chain manager inputs a new vendor into the system.
Right.
If the master data is wrong at the source, the government knows immediately.
So how do sophisticated organizations actually survive this level of continuous scrutiny without just collapsing? I mean, if every single transaction is being evaluated by a government algorithm the second it happens, it sounds like an impossible standard of perfection.
Well, they don't survive by simply working harder during audit season, that's for sure. The solution discussed in the sources is an architectural response. The most resilient companies are building compliance architectures that generate continuous internal reconciliation before the data ever leaves the building.
Okay, so they are essentially building parallel, like shadow algorithms. They run the exact same checks and validations the government is going to run, but they do it internally milliseconds before the API sends the data over.
Yes. They ensure every transaction is validated internally, every submission is reconciled, and every discrepancy is surfaced to their own teams immediately.
They build a mirror of the government's engine.
Exactly. And when you have that architecture in place, the annual external audit becomes a mere formality. The continuous internal monitoring has already done all the heavy lifting.
Which leads us to a really fascinating concept for the future, which is audit by exception.
Yeah, I love this concept.
If the architecture is doing the heavy lifting 247, what is the actual role of the human auditor 5 or 10 years down the road?
So audit by exception is a paradigm where automated systems constantly verify the completeness and the accuracy of the data in the background. The human auditors, the external firms, are only engaged when there is an anomaly that the system cannot resolve.
So they are brought in for complex professional judgments that actually require a human brain.
Right.
Things like valuing a unique intellectual property asset or assessing the potential financial fallout of a pending lawsuit. Things an algorithm can't do.
Exactly. The repetitive data gathering work is entirely automated away. The auditor transitions from being a data checker to being an expert consultant on exceptions and complex valuations.
There is a quote from the source material that perfectly anchors this entire shift. It reads, the organizations best positioned for this future are not those investing most in audit readiness. They are those investing in the data architecture that makes financial truth visible, continuous, and verifiable not once a year, but every moment.
It's a great quote. It fundamentally redefines how a company allocates its budget.
Yeah.
You stop spending vast sums of money preparing for an external audit, and you redirect that capital into bulletproofing your foundational data architecture. Because if your master data and your internal validation engines are flawless, the audit simply takes care of itself.
It just becomes a natural byproduct of running a tight operational system.
Right.
And this brings us to a massive aha moment regarding the nature of the audit itself. If we look back at the history we discussed earlier, the annual audit was always just a proxy.
Yeah, it was a proxy for financial truth. Because stakeholders couldn't see the raw truth perfectly, they hired auditors to provide a highly educated, statistically sound proxy.
Right.
But in a real-time, fully digitized world, a proxy is no longer necessary. Stakeholders, regulators, and management can just look directly at the verified truth.
We spent a century perfecting this proxy, and now the technology has just evaporated the need for it entirely.
It's wild.
It really is.
Okay.
But thinking about regulators having direct access to the truth brings up a highly provocative thought.
Yep.
I want to leave you, the listener, with this to chew on.
Okay.
If governments around the world, through these continuous transaction controls and real-time APIs, now hold a perfect, validated mirror of a company's financial truth, if they know exactly every dollar coming in and every dollar going out the second it happens.
Oh, I see where this is going. The implications for the tax system itself are staggering.
Exactly. If the algorithm already knows exactly what a corporation owes on a minute-by-minute basis, why do we even have a tax day?
Good question.
Right. What happens when governments decide to use that exact same real-time infrastructure to automatically calculate and withdraw corporate taxes continuously? Will the entire concept of a company formally filing taxes eventually become totally obsolete?
Yeah, I mean, the government could simply draw the balance daily, almost like an invisible background process.
Wow.
It certainly demands that we question the permanence of every legacy system we rely on.
It really does. It makes you wonder what other massive, century-old business processes are just waiting to be dismantled by real-time data flow. So the next time you find yourself stressed out, scrambling to gather data for a quarterly review or an end-of-year compliance report, take a step back. Ask yourself, are you still acting like that private detective dusting for prints, completely ignoring the fact that there's a 4K security camera recording everything in real time? Keep questioning the systems around you, keep looking for the underlying architecture, and thank you so much for joining us on this deep dive.